Hello, good day to all. I'm Kelvin here, Senior Market Analyst of O&R Asia Pacific. Welcome to today's three key charts to watch out for the upcoming 2024 US presidential elections to be held on the first week of November. So before we start, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before I share with you all the first key chart to watch, let me expand my screen first so that you guys could actually have a better view on the chart. So the first chart I'm going to share with you all is actually this particular Real Clear Politics betting average. So actually I'm taking up on the poll for key betting sites that represents the odds for Trump and Harris. All right, so this was actually obtained earlier from the 4th of August. So based on the 4th of August, Trump is leading by around 6.5 points or 6.5 percentage points with the odds of 50.4% and Harris coming in at 43.9%. All right, so however, you look at the latest one as of 12th of August, the odds has started to flip. So right now, Harris has a 6.6% advantage over Trump. So on the average right now, based on Real Clear Politics betting average, Harris is leading marginally by 52.6% versus Trump of 46%. So what we could see very dramatically since middle of July over here, Trump was leading then. So that was betting odds, average betting odds as high as around 66%. So at that point in time, it was still Biden. All right, Biden was still the Democrat president nominee. But after Biden stepped down and with the announcement of Harris, average betting odds as being compiled by the Real Clear Politics website, it dramatically starts to actually cover the earlier lead by Trump. Okay, so what we could see over here is that currently the betting markets is actually indicating a rather tight US presidential election race going forward, which means, i.e., initially since the middle of July, everyone is talking about the potential Trumponomics 2.0 coming back into the US economy. That means, i.e., Trump preferred policy of a very steep corporate tax cuts, and that potentially could benefit the US economy in terms of those smaller cap corporations. So at that point in time, at the end of July, on a monthly performance basis, we do see the Russell 2000, which is the comprising of small cap company, outperform the mega cap technology stocks with a monthly gain for the month of July up by 10%. However, in contrast, the S&P was actually only up marginally by 1%, and the heavily weighted mega cap technology component benchmark indices, which is the Nasdaq 100, was actually down negative 1.6%. So as this particular odds continue to be rather fluid, so given that if it continues to be a rather head-on-head race, potentially we may start to see a kind of, we call it, unclear passage of Trumponomics 2.0 going forward. Now, the next particular chart I'll share with you all is the implied VIX. That means we're talking about the volatility of the US stock market, and potentially it could also have an impact of the rest of the world as well, given that the US stock market is still the #1 market globally in terms of money inflow and in terms of so-called the market capitalization. So what's interesting over here, what I did in this chart over here is the average monthly VIX 4 months before the US presidential election, which is November. Then we're talking about July, August, September, October, and 4 months thereafter from the November election month, which is December, January, February, and March. So what I did over here is I used past data since 1992 US presidential election, and I take it from the 2nd of August. So I exclude the outlier, which was we start to see 5th of August spike up in the VIX. All right. So based on this past data since 1992, from July, August, September, October, before the US election, which is November, we see a gradual increase in the VIX. So in the past, the VIX tends to actually increase ahead of the November US election based on past data. And the way they increase over here, the big jump will come from the month between September to October. So I could see over here is this orange line is actually the average VIX all the way from the start of January 1999 to 2nd of August 2024, which has an average value of 19.58. Right, so you see this big jump over here, and thereafter, after heading towards the November election, we see the VIX level starts to taper off, but it still remains relatively high compared to its average of 19.58, taken from past data from January 1990 to August 2024, 2nd of August 2024. So what it means over here is that in the coming months, there could be an increase in volatility, implied volatility in the US stock market, and thereafter the volatility will tend to taper off, but it still remains relatively high based on an average perspective since 1990. Right, and the next chart I'd like to share with you all will be a chart that's related to trade relations with China and the impact on the US dollar in general, taking a look of the US dollar index. So we know that Trump policy so far in terms of trade policy is more skewing towards what he did during his first presidential election term earlier on in 2016 to 2018, where he actually advocated trade war with China. All right, that kickstarted on the week of 22nd of January 2018. So at this moment in time, Trump advocated for a blanket 60% tariffs on all China products and an additional 10% tariffs for all products coming into the US from the rest of the world. So that's rather aggressive in terms of his trade policy. So going back, potentially looking at a so-called start of a US-China trade war 2.0. Okay, if Trump's were to be elected, then how about the other camp, Democrats? Right, Harris herself, at this moment in time, she hasn't really stated clearly what's her trade policy will be or potentially will be. But if we take into a tea leaf of her predecessor, Biden, which has already announced his preferred trade policy going according to a tiering system, that means targeting China ongoing high-tech industrialization policy. That means you do have also a high tariffs ranging between 25% to 100% on China products that are centered on EV, electronic vehicle, as well as any related semiconductor products out from China. So it's more of a tiering system rather than a blanket policy which Trump advocates at 60%. Net overall, if Trump were to come into the picture and or even Harris come into the picture and Harris starts to advocate Biden's trade policy towards China, which is also still targeting an increase in tariffs, net overall, we will still start to see a heightened trade tension with China. And if we take into account what happened in the past, where Trump kickstarted the US-China trade war 1.0 in January 2018, that thereafter we saw a tremendous push up in the US dollar strength in the next 2 years from January 2022, right before the outburst of the 2022 March COVID pandemic. So we see a rise in the dollar strength as depicted by the US dollar index. So that also led to what I call regulatory measures taken from China to actually weaken the Chinese yuan. So the Chinese yuan also weakened as well during this period where we start to see the dollar strengthening against the offshore yuan by a similar magnitude as a directional move. And during this earlier push up from the dollar strength, we also see a spike up in the VIX itself as well during 2019, and thereafter it starts to temper off and it starts to spike up again way ahead about 2 months or 1 month ahead of the pandemic outburst in March 2022. And during this period of time, given there's a risk of what I call retaliatory measure where China deliberately weaken its currency against the US dollar, that means the US dollar strengthening against the Chinese yuan, there's also a risk of we start to see a spillover impact towards other major exporting nation will also got to actually be forced to actually weaken their currency against the US dollar. So that could actually lead to a broad-based currency war, especially during the Asia Pacific region, where we know that the Asia Pacific region is being centered by global exporters like South Korea, Taiwan, Singapore, and that also doesn't bode well to Asia Pacific benchmark stock index like the Hang Seng index, where we start to see during the period where we start the start of the US-China trade war in January 2018, it actually underperformed against the rest of the world, and itself is in absolute terms is also declined significantly as well. So going forward right now over here is that we got to monitor how the US dollar index play out right after the US presidential election, especially being centered on the new trade policies that Trump administration or potentially Harris administration were to actually advocate towards China going forward. Right. So that is the 3 key charts to actually look out for in this upcoming US presidential election that's going to be held in November. So with that, I'm Kelvin here signing off, but this is not all. Do actually keep a close eye watch on more content that is going to be available soon out on our US special election page